class. Today we're going to be looking at your second problem that's going to be due in chapter 18. So I'm going to share my screen with you and we're going to look at Cengage together. You should be able to see problem 18-5B. That's what I'm going to demonstrate for you today. And what we'll be preparing is a statement of cost of goods manufactured and an income statement for a manufacturing company. For a manufacturing company, before you can prepare an income statement, you must prepare a statement of cost of goods manufactured. The statement of cost of goods manufactured will be prepared for a period of time. As you can see in Cengage, they have started this statement of cost of goods manufactured by naming the company, statement of cost of goods manufactured, and for the year ended. What goes in the cost of goods manufactured are your product cost, or what we refer to as manufacturing cost. Product cost will be your direct materials cost, your direct labor cost, and your factory overhead cost. They will also include cost of work in process in order to find the total cost of goods that are manufactured. So what they've done is they've given you a list of accounts, and some of these have beginning and ending balances. So we probably need to talk about those. First of all, they talk to you about materials. Materials is going to enter directly into the product itself. At the end of the period, we're going to need to count our materials. What we have left over at the end of the period will become the beginning materials for the next period. Evidently, this company's been in business for a while because they have some beginning materials that they're starting with. This beginning materials inventory is $77,350. The ending materials inventory would come from a physical count done at the end of the accounting period. The inventory accounts will always appear on your balance sheet. I think that's important for you to know. For a manufacturing business, there are three types of inventories. There is materials inventory. There's what we call work in process inventory. Now, work in process inventory is an account that we set up for the materials that we have started in process, but we haven't completed them yet. So as you can imagine, you may have started some items during this year, but by the end of the year, you wouldn't have finished those items. Work in process, they're not finished yet, but they're already started. So the materials have gone into the work in process where they're in a process of being converted to finished goods. They're just not there yet. So if you have some goods, materials that you've started, some goods that you started, but you haven't finished them, they're considered to be work in process. And just like with materials, work in process will have a beginning balance that comes from the ending balance from the last period just brought forward. At the end of the period, we will count the amount of materials that we have in work in process, and that ending count is what we refer to as the ending work in process. The third type of inventory account that you need to know about for a manufacturing business is finished goods inventory. Finished goods inventory are the goods that you've completed during this period of time. The finished goods inventory, the beginning inventory, is what you had left over from last period that you hadn't shipped yet. You may not have even sold them yet. It just depends on what kind of company that you're working for. So if you have goods that you manufactured, you hadn't sold them, you hadn't shipped them, we consider those to be finished goods. And most likely we're going to have to store them somewhere where we can keep account of them. I will take a physical count at the end of the year. What's left over at the end of the year ends up on the balance sheet in the finished goods inventory account. And then next period, the ending finished goods will become the beginning finished goods. But materials, work in process, all of these are inventory accounts. All of these ending inventory balances will show up on your financial statements. Advertising expense would be considered to be a selling expense. And so that's going to end up on your income statement, as will depreciation expense of the office equipment. Now, if it's depreciation expense of the factory equipment, that's a factory cost, and that will go on the cost of goods manufactured. The cost of goods manufactured is all the manufacturing costs for the period of time. So since factory equipment depreciation expense would be considered a factory overhead account, it would be located on the cost of, on the cost of goods manufactured. Your direct labor is also a product cost and would be found on the cost of goods manufactured. Your heat, light, power, all for the factory, that's factory overhead. It would be found on the cost of goods manufactured, as well as indirect labor and materials purchased. That's going to help us to determine how many materials we've used. So this part right here is going to end up on the cost of goods manufactured. Your office salary expense is an administrative expense. It's going to end up on the income statement. Your property taxes, which are your factory, that's a part of factory overhead and will be in the cost of goods manufactured. Anything dealing with the factory goes into the cost of goods manufactured. So rent expense is going to go into the cost of goods manufactured. Sales, of course, is a revenue account. It's going to show up on the income statement. Sales salary expense is a selling expense, going to show up on the income statement. Supplies, factory is going to be a part of factory overhead, shows up on the cost of goods manufactured. And miscellaneous cost, factory, those two will show up on the cost of goods manufactured. Now we're ready to build this cost of goods manufactured. Notice that one of the blocks is all the way out to the side. These represent columns here. There are 3 columns on the cost of goods manufactured. In the first line, we usually record our work in process, the beginning amount of inventory. And so what you're going to do is you're just going to go up and pick up your work in process at January 1st, which was 109,200. The next section, this part right here, is going to help you to determine what you have used as far as materials are concerned. The ending part of the materials used is going to go in this middle column, the first block here. But to get to that, we have to go through the steps to find what the direct materials used are. So when we're going through these steps, what we have to know about direct materials is how much direct materials we had to start with. So I'm going to choose my direct materials inventory at January 1st, and that amount was given to us. The materials inventory was 77,350. To that, I'm going to add any purchases of materials. We're talking about materials here. So I got to look for my materials purchases. And the materials purchased was 123,500. When we take our beginning inventory and our purchases and we combine them together, it'll give us the total materials that we have available to use, cost of materials available to use, and it's the total of these two items. So I'm going to pull down my calculator here, and I'm going to put in 77,350, and I'm going to add to that 123,500. And the total amount of our cost of materials available for use is 200,850. I'm going to go ahead and check my work just to make sure my math is correct. It's probably a good idea to do that as you go through. Once you've determined how many materials you have available for use, then you're going to subtract from this the ending amount of the direct materials less the materials inventory at the end of the year. And that amount was given to us. The materials inventory at the end of the year was 95,550. $95,550. When you subtract the materials ending inventory from the cost of materials available for sale, it will leave you with the cost of the direct materials used. This is an important part of the manufacturing statement. This tells you how many raw materials were used during this period of time. And again, we're going to take this cost of materials available for sale and we're going to subtract out the ending inventory of the materials, and that will leave us with 105,300 as the amount of the direct materials used. So once we have our materials used, the next thing that we want to put in that middle column is our second manufacturing cost. So we've accounted for direct materials. Now we've got to count labor. And I'm going to look to my information to see how much direct labor we have, 186,550. And I'm going to check my work, and everything is okay so far. So the next thing I want to do is work on my third manufacturing cost, which is considered to be factory overhead. Factory overhead is made up of all factory expenses other than direct materials and direct labor. We've already accounted for those up here. So we want to put all the rest of our factory expenses in under factory overhead. So we'll choose from our drop-down list. Indirect labor is certainly one. And we hunt for the amount. The indirect labor is 23,660. So indirect labor is our first sub factory overhead expense account. Also, depreciation expense on factory equipment would be considered to be a part of factory overhead. And depreciation expense on factory equipment was 14,560. Another factory overhead would be heat, light, and power. It's another factory overhead cost. Heat, light, and power. And the amount of that is $5,850. The next type of factory overhead cost is property taxes on the factory. $4,095. The next type of factory overhead account is your factory rent expense. And that amount is $6,825. And then the next factory overhead account is going to be factory supplies. And factory supplies is $3,250. And then one last blank to fill in would be miscellaneous factory cost. And that's $4,420. Then what we need to do is combine all of our individual factory overhead accounts together to find one grand total for the factory overhead. So the total of my factory overhead is $62,660. Now, all of these in the middle column, the second column here, are your total direct materials used, your total direct labor, and your total factory overhead. All of those combined are what we call total manufacturing costs that are incurred during this period of time. So I'm going to combine my factory overhead, which I already had in my calculator, with my direct labor and my direct materials used. And if I got everything totaled right, it's 354,510. Check our work. Looks like we're okay so far. So I'll move this out of the way because I want to emphasize this part to you. This is where students get lost. They can't remember what to do next. And do you see how these line up? That means you're going to do something with this column right here. But this is your beginning working process, plus all the costs that you've incurred this period. See, technically these came from last period because you weren't finished with the working process last period. So they become a part of all of the costs this period. But then we have to back out our ending working process. So let me put that in right here so you can see what I'm talking about here. What you're going to do for your ending working process is just put in the amount that they gave you. The ending working process is $96,200. Now, to find the total of the manufacturing cost for this period, we're going to combine the beginning work in process inventory plus the total manufacturing cost incurred, and that will give us the total cost of our manufacturing cost. So 463,710 is the total manufacturing cost for this entire period of time. And now you're going to subtract out the work in process ending inventory. And if you think about this, it'll make sense to you. The cost that you actually incurred during this period is direct materials used, direct labor, and factory overhead. Then we had to add in the beginning inventory that came from last period's cost that weren't finished. And then we're going to deduct out our ending work in process. And what that will leave us with is the total cost of goods manufactured. So this 463,710, you would subtract from that the ending work in process. And that will leave you with the cost of goods manufactured. And this is an actual cost of goods manufactured statement that we prepared. And it's very important that you know how to do this. So I would definitely learn each one of these parts because you will see this again. And you will definitely see it again if you're an accounting major. This will come right on with you to cost accounting. So this is very important information for a manufacturing business. Start with your cost of goods manufactured. The ending amount of cost of goods manufactured is going to feed in to our cost of goods sold, which will become a part of our income statement. On this particular problem, they combine both the cost of goods sold and the income statement amounts together. So what we're going to do is we're going to start with the income statement. That's the next thing they wanted us to do. The income statement too is for a period of time. It's from the beginning to the end of the period that we're going to measure to see what our profits or our losses might be for this period of time. When you do an income statement, you always start with your revenue. In this case, our revenue account is our sales account. So I'm going to look at my information that they gave us. I'm going to look for sales. All right, here's your sales account at $864,500. So that amount was given to you. Then we're going to calculate our cost of goods sold. In calculating cost of goods sold, we're going to need to start with our beginning finished goods inventory. And that beginning finished goods inventory was given to us. The beginning finished goods inventory was 113,750. The cost of goods sold also consists of the cost of goods manufactured. So you start with what you had in beginning finished goods inventory. That's the inventory that you had on hand at the beginning of the period. And then we're going to add to it the cost of our manufacturing for this period of time. So we're going to add the cost of goods manufactured, which was 367,510. That came from up above there. And what that will do is that will give us the cost of the goods that we have available to sell. The cost of finished goods available for sale is the best answer there. We're going to add these two together to get that amount. So 113,750, which was our finished goods beginning inventory, plus our cost of goods manufactured for this period of time, will tell us how much goods we have available to sell. So 481,260 is the cost of my finished goods available for sale. The next step in determining cost of goods sold is to subtract the ending finished goods inventory from this amount that's available for sale. The ending finished goods inventory was given at $100,100. And now we can determine our cost of goods sold. And to determine the cost of goods sold, we're going to take our finished goods plus the cost of goods manufactured, which gives us a subtotal for our cost of goods available for sale. We're going to subtract 100,100 from that amount. Let me put it in my calculator, right? 481,260 minus 100,100 equals 381,160. Once you've determined your cost of goods sold, you would subtract that from your sales to get your gross profit. Your gross profit is the profit that's available before we deduct out our operating expenses. So your sales of 864,500, that figure right there, minus your cost of goods sold, equals your gross profit of 483,340. The next category is your operating expenses. Operating expenses consist of both selling expenses and administrative expenses. They want you to list each one of these separate. And so your first administrative expense would be office salaries expense. And your office salary expense is $77,350. Your next type of administrative expense will be depreciation expense on your office equipment. And that's $22,750. Your next type of administrative expense will be your property taxes, your headquarters building. Property taxes, headquarters building is $13,650. So that's for the headquarters building, and make sure you subtotal it here. You may have noticed that when you are working on your homework problem 18-5A, you got to make sure you put in the total of your administrative expenses and the total of your selling expenses. If you don't do this, Cengage will mark it wrong. That's why I sent you that tip telling you to make sure that you put in the total of each one of these expenses, because I don't want Cengage to mark it wrong, and I don't want you to get frustrated with it. It should have been marked a little bit clearer, I think, from Cengage point of view, but it wasn't, so I'm just telling you what to do there so you won't get frustrated with it. By the way, class, if you find yourself getting frustrated with it, get up and take a break, do something different, send me an email, say, I don't know what I'm doing, that kind of thing. Don't suffer. There's no need to suffer. So if you don't understand something, just shoot me an email. The next category that we're listing is our selling expenses. Advertising expense is a selling expense. So we're going to look to see what they gave us for advertising was $68,250. And then we're going to look for our next selling expense, which would be your sales salaries expense. And that amount is $136,500. Then you're going to combine your selling expenses to get the total of the selling expenses. And then you're going to combine the total of the administrative expenses, the total of the selling expenses together, and that would give you the total operating expenses. once you know what your total operating expenses are, you're going to subtract those from your gross profit. What you will be left with is your net income in this case, since they don't have any other types of items listed here. So we're going to take 483,340 and we're going to subtract out 318,500. And that total will give you 164,840. And that's all there is to this problem. So if you want to go back and take a good look at that, and the cost of goods manufactured, it's very important to do this first because this information here feeds into the cost of goods sold right here. And then the cost of goods sold, this amount right here, feeds into your income statement. I have seen cost of goods sold statements created separately from the cost of goods manufactured and the income statement, but in this case, they've combined it all together. So that's all I'm going to talk to you about. We'll see you next time. See you later. Bye.